Crypto is often accused of being a climate villain, burning energy like there's no tomorrow. But lately, some projects are flipping the script saying, what if we use crypto to help the planet? Enter carbon credits, and the idea that blockchain could be used to track, trade, and maybe even improve environmental efforts. Sounds promising, but is it really green or just greenwashed? So what's really going on here? First, what are carbon credits? A carbon credit is basically permission to emit 1 ton of carbon dioxide. Companies buy them to offset emissions. So instead of actually cutting pollution, they just pay to support a forest, a renewable energy project, or something that's supposed to cancel out the damage. Now add crypto to that mix, and things get interesting. Here's the pitch. Use blockchain to make the carbon credit market more transparent. No more middlemen, no double counting, no fake projects. Everything tracked on-chain with smart contracts making sure the offsets are legit and verifiable. Sounds good in theory, right? Projects like Toucan, Climadao, and Flow Carbon have all tried this, bringing real-world carbon credits onto the blockchain. Some even let users buy and retire credits directly from their crypto wallet. Climadao, for example, tried to build a whole economy around tokenized carbon. But here's where things get murky. Not all carbon credits are created equal. Just because a credit is on-chain doesn't mean it's high quality. Some come from questionable sources, like forest protection projects that may have never been under threat in the first place. If the original credit is junk, wrapping it in crypto doesn't make it cleaner, just flashier. Double counting and speculation. Some on-chain credits were already counted in traditional markets, so using them again for offsetting is kind of like reusing a Band-Aid and calling it sterile. Plus, many tokenized credits ended up getting speculated on, bought and sold like meme coins, with little focus on actual environmental impact. Transparency versus impact. Blockchain is great at transparency. It shows where tokens go, when they move, and who holds them, but it can't verify whether a tree is still standing or if a wind farm is actually displacing coal. You still need trustworthy data at the source, and that's where things often break down. So, is it green or is it greenwashed? The truth is, it's both. Crypto can bring accountability, efficiency, and access to carbon markets. That's real potential. It can make offset markets faster, less corrupt, and easier to audit. But without high-quality credits, strong regulation, and a shift away from pure speculation, it risks just being another shiny wrapper on a flawed system. If done right, blockchain could improve climate finance. If done wrong, it's just pollution, with better marketing. So next time you see a green crypto project, ask the real questions. Where do the offsets come from? Are they additional and verifiable? And are we actually reducing emissions? Or just moving them around on a prettier spreadsheet? Because when it comes to saving the planet, code alone isn't enough. The truth has to be on-chain and on the ground.